All right, video 3 of 3. Let's go ahead and let's finish this. And so now what I'm going to do is I'm going to take you through an example of every single one of the entries that we need to know for this chapter. Now, this is the only chapter in all of managerial accounting that we do journal entries. And so we don't do journal entries in any other chapter of managerial. All of it's just going to be calculating costs and trying to trace costs and things like that. So as we do these, I'm going to walk you through these. Some of you just took financial accounting last 8 weeks, but some of you took it a year ago. So it may have been a while since you've seen this. And so we're going to go through each of our items. And so I want to keep in mind that the only T accounts that I'm concerned with are these. Okay. So these are the only T accounts that I'm concerned with. I am trying to build income statements in this chapter. And I'm going to keep track of my inventory, my COGS, and my overhead so that I can get COGS. Because remember, whatever the balance is in overhead needs zeroed out. So I can get COGS so that I can subtract selling and admin to get to net income. So this is a really nice sheet. And I will try to make sure that I put this out on the Moodle shell for you, because this will actually tell you where all of your debits and credits are. So if you buy raw materials, you put them in here. As you use them up, you send them to WIP. 3 things go into WIP: direct material, direct labor, and overhead applied. As you complete a job, you remove it from WIP and you send it to finished goods. As you sell a job, you remove it from finished goods and you send it to COGS. And then our overhead, we're going to keep track of all of our actual overhead over here and our applied overhead over here. We're going to use our predetermined overhead rate to apply overhead. We just did it, 101,000 times 5. So we apply overhead based on our predetermined overhead rate. But that applied overhead is what goes into WIP. And then our actual overhead, here are examples of our actual overhead costs. And then we're also going to keep track of our selling and admin expenses so that we can build our income statement. So this account has to be closed before you do your income statement, because we need to get rid of the over under and send it to COGS so we can have the correct balance for COGS, so we can send it to our income statement with the correct number based on over under. Okay, so we'll refer back to this sheet often as we go through our journal entries. So the first entry we're going to do is we're going to just buy raw material on account. So when you're buying raw material, you're going to debit raw material. And you're either going to pay cash or you're going to pay later. Those are your 2 choices. Now this one says on account, so we're going to pay later. So the name of that account from financial accounting is accounts payable. If we paid now, it would be cash. So those are your only 2 choices on what to credit here. You're either going to pay now or you're going to pay later. So that's 150,000. So this T account is not going to affect this, because I'm not really keeping track of what my cash is or what my accounts payable is. So it won't actually matter either way. I'm only worried about these T accounts, okay? Because I'm just trying to build an income statement. I'm not building a balance sheet in this chapter. So the next one is the big difference between what we do in chapter 2 versus 3, because it says raw materials that cost 160 were issued from the storeroom for use in production. Of this total, 136 is direct materials, and then 24 is indirect materials. So keep in mind that indirect materials are not going to WIP. Indirect materials are part of overhead. Indirect materials are things like sandpaper for a car, or other like cleaning supplies, or oil to change the oil in the machine. Those are indirect materials. So they do not go to WIP, they go to overhead. So when the number comes out of WIP, or out of raw materials, it's direct and indirect. And then direct will go here and indirect will go into overhead. So direct goes over here and indirect goes in overhead. So what we're going to do, and I don't like how this is looking. I'm going to move that down. So I'm going to put direct material into WIP, and that was 136. The indirect material of 24 is going to go in overhead. But all of it will come out of raw materials. Okay, so in my T account example, I would say that the two numbers that come out of here are a total of 160, but only 134, was it 36? Can't remember now. 136 will come over here. So you'll notice that back in our previous chapter, we would, I was looking for my little arrow thing. Shapes. Oops. Man, I'm bad at my job today. So normally we take the number and we bring it over here, right? But not all of it is direct. So only the direct part goes there. So the indirect will go down here with all of the other indirect costs. So all kinds of indirect costs can happen. Indirect material is one, indirect labor, factory utilities, factory depreciation, and so on. Factory insurance, all of those costs will go on the debit side of overhead. So this WIP, I only put the direct materials in there, and then I put the indirect materials in overhead. So the next one is labor. So direct labor will go in WIP. Three things go in WIP: direct material, direct labor, overhead applied. So direct labor will go in WIP, and direct labor is 200,000. Indirect labor, all indirect costs go in MOH. Indirect labor is 85. Those are supervisors. And then selling and admin labor is 90 for a total of 375, I believe. Let me add it up to make sure. 285 and 90. Yeah. So the selling and admin labor, this would actually go in wage expense, but it would be like for the selling department or the admin department. So what we're going to do to make things simpler is we're just going to debit selling dash admin expense. And we're going to put all of our selling and admin expenses in one account, because when we get to the income statement, I need all of the selling and admin expenses to come off of the income statement. So this expense account, I'm just going to put them all in one T and just put advertising, sales labor, admin labor, selling and admin insurance, depreciation, whatever. All of those things are going to go on the debit side of selling and admin expense so that I can then put them in here. It's an expense, that's why it's a debit, ADE or debits. Okay. So then if this is actual, this is what actually happened. That's why it's on the debit side of MOH. And then I probably paid those people, so I'm going to give them cash. Okay. If you paid them later, you could use wages payable, but I don't know. I can't wait to pay them for the whole year. So I'm guessing I gave them cash. So again, for WIP, three things go in WIP: direct material up here, direct labor, and then the other thing that goes into WIP will be overhead applied, but that'll be later. So MOH is for my indirect labor, and then selling and admin labor went in selling and admin expense. Utility costs for the factory, 40,000. So utility costs for the factory is another example of overhead. And I guess I paid that. I'd have to pay my utility bill. Insurance, 20,000. 80% for the factory. Factory insurance will go in MOH. 80% of 20,000 is 16. And then 20% selling and admin. 20% of 20,000 will go in selling dash admin expense. 20% of 20,000 is 4 for a total of 20,000. And you might have paid cash for this, but this said it was prepaid insurance. And so we're actually going to use prepaid insurance here. If you use cash, that's fine too. Again, prepaid insurance is another asset, and we're worried about building an income statement. So if you use the wrong account right here, it won't hurt anything, like as far as your homework goes, because we're really only worried about building our income statement. So we're really trying to get just revenues and expenses correct. So this is prepaid insurance because it says that we prepaid it. But if it didn't say that, if it just said 20,000 of insurance, then you'd probably use cash instead. So advertising costs of 100,000. Advertising is not overhead. Advertising is a selling admin expense. Okay, depreciation of 145 on the factory and 15 on selling and admin. Factory depreciation will go in overhead. Selling and admin depreciation will go in selling dash admin expense for a total of 160. And then the other side of depreciation is always accumulated depreciation. This is a contra asset that you haven't thought about in quite a while, not since you took your financial accounting final. So accumulated depreciation is a contra asset. It has a credit balance, and it's the amount of depreciation in total on all the assets. So normally the journal entry is a debit to depreciation expense and a credit to accumulated. But instead of using depreciation expense, we're just putting all of our selling and admin expenses in one T account called selling dash admin expense. All right, so the next thing we need to do is we need to come up with our predetermined overhead rate. And so in this situation, I went ahead and kind of did it for you, but I showed you like how I would do it. So so when you do your homework, it'll say apply overhead to jobs, question mark. And you're just have to come up with the dollar amount. And that's usually when my day students just stop doing their homework. They're like, they just stop the problem and they're like, I couldn't figure that out. So that's where I stopped. And I'm like, ugh, keep going. So manufacturing overhead is applied to jobs, and the predetermined overhead rate is based on the following estimates. So remember that anytime we apply overhead, we use our predetermined overhead rate, and that rate is estimated overhead of 315 and estimated driver of 210. Now, our driver is not direct labor hours. It's not direct labor hours. It says direct labor cost. So that's a dollar amount. So we estimated that we're going to spend 315 in overhead and that we're going to spend 210 on direct labor cost. So we would do estimated overhead divided by estimated driver. And our answer is 1.5 per direct labor cost, per direct labor dollar. So what you would do is for every dollar of direct labor incurred, we're going to apply $1.50 of overhead, 1.5. So how much was the direct labor in this problem? So we would need to scroll up until we find the direct labor. And I make the students find this when we're in class. I'm like, okay, go find it. And then they say, oh, I found it. Letter C, direct labor is 200. So direct labor is 200,000. So what you'll do is you'll take 200,000 times $1.50 per direct labor dollar. So let me see here. Oops. Okay, so my spacing is a little bit off, so I'm going to move that down so I can see the whole entry together. And so what I'm going to do is I am going to apply overhead. Now, when you apply overhead, it's the credit side here, right? It's the credit side of overhead because actual applied. So when we apply overhead, we're going to credit overhead. On the second line, we will credit overhead, and our debit is WIP. Three things go in to WIP: direct material, direct labor, overhead applied. And that dollar amount is 1.5 times 200,000, 300,000. Okay. All right, so that's how you apply overhead. Every time you apply overhead, you'll be debiting WIP and crediting MOH. And the way I remember where it goes is I think about the T accounts. I think about the fact that applied is on the credit side here and the debit side here. So the next thing we're going to do is says goods that cost $650 to manufacture according to their job cost sheets are completed and transferred to the finished goods warehouse. So when we complete goods, we remove them from WIP and we send them to finished goods. As we complete goods, we remove them from WIP and we send them to finished goods. So it will be a debit to finished goods and a credit to WIP. This is COGM, the number that comes out of WIP and goes to finished goods. And then the last one, it says sales for the year, all on credit, are 900,000. The goods that were sold had a cost of 600. So we're going to sell them for 900, and it says all on credit, meaning on account, meaning we're going to receive the money later. So when you sell inventory, we do two entries. We do accounts receivable, since it's on account, 900,000. and that's the revenue. Okay, so this is the money coming in. If they were sales for cash, then you would debit cash instead. And then the goods that left the building are going to be COGS of 600,000. That's a 60. And we're going to credit finished goods. Because when you sell goods, they leave finished goods and they go to COGS. So debit COGS, credit finished goods. Debit COGS, credit finished goods. So now what I want you to do is I went ahead and put in the beginning balances for you, but I want you to post these transactions into the T's. So go ahead and hit pause. And then I want you to post each of these transactions into the T's. And I want you to notice that accounts payable, I didn't give you a T account for that. The only T accounts I'm going to give you are raw material, WIP, finished goods, cost of goods sold, and MOH. Just those T's. And I want you to put the numbers in. And then I want you to find the ending balances in each. So to post, posting is a verb. It's the process of transferring it from the journal to the ledger. The journal entries, this is the journal. So I'm going to go to raw materials and I'm going to put a number on the debit side. Okay. And then accounts payable, I don't have anything. So I'm going to skip that. Letter B is a debit to WIP of 136. A debit to overhead of 24. And a credit to raw materials of 160. Okay, so you can hit pause and you can do them all, or you can just sit and watch me do them, but I want you to try to do them on your own as well. So remember this 160, how it comes over to WIP, but not all of it comes over to WIP because we have some that's direct and some that's indirect. All of our actual overhead goes in on the debit side and then applied is on the credit side. So letter C is a debit to WIP of 200. And so I'm just posting 200. The indirect labor was 85. The selling and admin labor, there's nowhere to put it. But I do know that I'm going to need it later. So what I usually do is I just kind of highlight it. So I'm gonna want that number later. Because it needs to go to my income statement. And then cash, nothing. Okay, MOH is a debit for 40 and then cash. So I'm going to put my 40 here. Okay, and then letter E, a debit to MOH of 16. And then I've got more selling and admin expenses. Again, I'm just going to kind of keep track of those because I'm going to need them later. MOH is 16 though. So I'm going to go to MOH and I'm going to debit for 16. Okay, the next one. Selling and admin expenses of 100. Again, I'm going to need that later. And then cash. MOH of 145. And then selling and admin of 15. Again, I'm going to need that later. And then accumulated, I don't care. Letter H, debit WIP, credit MOH 300. All right, debit WIP. Credit MOH. And then the next one is letter I, debit finished goods, credit WIP, 650. And then accounts receivable and revenue. I don't need that, but revenue, I'm going to need it for my income statement later. So I'm just going to highlight that a different color. Okay, but COGS is 600. And then I need to find my balances and everything. So I'm going to draw a line all the way across. And here I have 20 and 150, which is 170 minus 160. So this one looks like 10,000. Double underline it. Draw a line across here. And I'm going to take 74, 136, 200, and 300 minus 650. So my balance in WIP is 60. Double underline it. Okay. And then I have 40 and 650, which is 690 minus 600. So this looks like 90. Hope I'm right. Should never do math in my head. This one's still sitting with 600 right now. And then we're going to talk about overhead down below. But if we look, if we add these up, we've got 24, 85, 40, 16, and 145. So over here, it looks like I have 310. And over on the credit side, I only have 300. So it looks like my balance is 10 over here. So this is actual, and I did not apply enough. If you apply too much, then the balance is bigger over here, but it looks like I am under applied. Okay, so that's the balance there. So that's the next part. So the next thing we would need to do before we can go on and do our income statement, we would need to close that. So it looks like we need to debit overhead. And so here, do I have stuff here? Maybe. Yeah, I do. Okay, so it was 310 over here and 300 over here, giving me a balance of 10. So I need to go ahead and close that. So this is actually just a reproduction of the overhead account that you actually just posted to. So we have a balance of 10 on the debit side. So to get rid of it, we need to credit overhead. So we are going to credit overhead. I'll be done in like 5 minutes. I'm not lying. So I need to credit overhead. Oh, look, there's something underneath there. There. Yep. So I tried to do overhead twice. Okay. So I'm going to credit overhead debit costs. And so that will actually get my overhead to the correct number. So the next couple of things that I showed you are examples of the schedules that a lot of accounting textbooks use. I use the T accounts instead, and I don't make you guys memorize the schedule, because to come up with this, they want you to do a schedule of COGS. And the schedule of COGS, what it literally does is it starts with beginning WIP, and then it adds beginning direct or beginning raw material plus purchases minus indirect material minus ending inventory of raw material plus direct labor plus overhead applied minus ending balance of WIP equals COGM. Now, you don't need to know that. Okay, but that's the way that a textbook teaches you to come up with COGM, is to memorize that formula. And that formula is not something I would memorize. The only reason why I haven't memorized is I'm thinking about the T accounts. And so to get this number, I start off with the beginning balance of this one, and then I add this one and add this one and subtract indirect material and subtract ending balance plus this one minus this one equals COGM. And that's the only way I can remember it, because I can't memorize it otherwise. But that's kind of what the book has you do, and I don't like that. So that's why we don't do it this way. But we can see the 650. 650 is COGM, and we knew what was COGM because it's a number that comes out of WIP and goes to finished goods, and that's a much better way to understand the material. So the next is the income statement. And so the income statement, I want you to notice that I have 610 for COGS rather than 600. And that's because I had 600, but then I added an extra 10 to it. So my actual balance in COGS is 610. And then my selling and admin expenses are, I colored them blue. 90, 4, 115. So when we look down here, 90, 4, 115 for a total of 209. So I just have you guys, when you're doing it, just put them all in one T account for selling and admin expenses. And so revenue minus COGS is gross margin minus your selling and admin expenses is net income. The textbook also shows a schedule of COGS, which is something that I don't usually do. But a schedule of COGS is just calculating COGS. And so what you do is you start off with this one plus this one minus this one equals that plus any over under. But we don't need to do that. So the last thing I want to do, just to show you guys putting things directly into T accounts, is to take this problem and just put it directly into T's. So I don't have any beginning balances, and I'm just going to drop the numbers into T's. Usually I have the students do this while I'm handing out homework sheets to them in class. And so purchasing raw material goes on the debit side, and then it says on account, so that would be accounts payable. Materials costing $13,000 were requisitioned for use in specific customer jobs. An additional 1 is for general factory use. So 14 is going to come out, but only 13 comes over, and the other 1 will go in overhead. So a total of 14, because 13,000 is for specific jobs, and an additional 1 is for general factory use, like indirect material. Okay. 7,800 is direct laborers. 9,500 is for factory employees who do not work directly on products. So the 9,500 will come down here in overhead. Oh, you're fine. Factory overhead is 5. And it said they paid cash. Fine. 3,700 in depreciation on the factory machines. Looks like I need to put a row. Okay. So 3,700 more for depreciation on the factory. Overhead is applied to jobs using our predetermined overhead rate of $24.50 per Direct labor hour, 780 hours. So you take 2450 times 780. And you get 19,110. So 19,110 is the applied overhead, and that's the number that comes into WIP. Because remember, 3 numbers go into WIP: direct material, direct labor, and overhead applied. Okay. So jobs costing 38,000 are completed. When they're completed, you remove them from WIP and you send them to finished goods. Jobs costing 32 were sold to customers for 55. So this is the revenue, but the cost of the good that was sold, the cost of the good is 32. And then it says overhead is close to COGS. So I'd have to go to my overhead account and I have to see if I'm over under 195, 5, and 37. 19,2. So I have 19,2 of actual. My applied is only 19,110. I did not apply enough. I'm off by 90. So to close that, I would credit here and debit here. For every debit, there must be a credit. So that would bring the balance in overhead to 0. Looks like my COGS is 32,090. This one has a balance of 6. So does this one. And then this one's balance, I need a calculator. Will be 13,000, 7,800, 19,110 minus 38 is 1910. So that is it for the chapter 3 notes. So I'll make a separate video that will be a homework help video for you guys. And so I hope you're doing well. I love this chapter because I love debits and credits and journal entries. And so I hope you're doing well, and I'll talk to you later. Stop.